discuss about the challenges that faced by SME. For the introduction, small and medium enterprise SMEs are a business with asset, sales turnover, and employee numbers below a specific threshold. SME plays an important role in Malaysia's economy by creating job opportunities and reducing unemployment rates in Malaysia. However, there are also challenges that faced by SME that cause almost 60% of SME shut down during their first 5 years of operation. And for this article, it discusses about the challenges that faced by SME, focusing on financial management and marketing skills, which have been identified as a barrier for their success.
Next, in this slide, I will state two issues regarding our article, which is for the first one, Malaysia SME face a high failure rate with around 60%, shutting down written the first 5 years. This is largely due to the lack of knowledge about business challenges and inadequate financial and managerial skills. The second one is, despite various government assistance programs, the failure rate continues to rise. The highlights a significant gap in understanding and addressing this issue. To help SME trade, it is crucial to focus on improving their financial management, business planning, and access to effective training and resources. I will briefly address some key challenges faced by SME, focusing on three main ideas, which is marketing problem, management issue, and financial constraint. Firstly, marketing knowledge is critical for SME to trade. Unfortunately, many struggle due to a lack of expertise. This makes it difficult to effectively promote their products, especially in international markets. Limited network and knowledge further weaken their competitiveness. Secondly, management issues often arise from a lack of business planning and financial management skills. SME may overlook employee training and development due to the concern about cost and time, further hindering growth. Finally, financial constraints remain a major obstacle. Access to credit is limited, as banks often view SME as high risk, leaving many unable to secure the financing they need.
As for the solutions in relation to the three challenges that have been mentioned by my friend, which is the first one is marketing problem, second is management issues, and lastly is financial constraint. So in solving these challenges the first one is by creating marketing strategies, by creating partnership between SME and influencer to enhance market recognition. Second one is by focus on development of management skills, by providing business program where entrepreneurs guide business owners in managing their business. They can also guide managers or employees in distributing their tasks effectively and also plan strategy decisions that align with the company objective. Lastly, by access to finance, by offering subsidies for startup companies or businesses. By this way, it can help new business to have a sufficient capital. As for the recommendation, the first one is by improve marketing strategies. SME should develop efficient marketing strategies to enhance brand recognition in the market. Second one is by enhance management skills, by provide training program for SME owners to improve leadership skills and also management skills. Lastly is by access financial support, by providing more funding options for SME such as low interest rates and also flexible repayment of loans.
Next is conclusion for this article. To conclude, SME give a big impact to economic growth in Malaysia. This is because they create many job opportunities and contribute to the country growth. However, there are also challenges that might be faced by SME, such as financial problems and inefficient management skill. This problem will lead to the business failure, which is make it harder for them to grow in the market. So, in this article, it highlights the importance of solving this issue. For example, improve management skill, enhance marketing skills, and better access of financial. With this solution, SME can compete with other competitors and remain stable in the market.
Hi, Assalamualaikum. My name is SYAZWANA binti SHAMSHUL and today I'll be presenting on the topic of investment appraisal. To begin with, let's define what investment appraisal is. Investment appraisal, also known as capital budgeting, refers to the process of evaluating and analyzing potential long-term investment. It helps company make decisions regarding long-term investment and also involve decisions regarding investment in non-current assets, requiring substantial initial outlay with benefit over multiple years. In simple terms, investment appraisal helps business decide whether to invest in project or asset that will bring future returns. This asset can include things like property, machinery or equipment that require a significant upfront cost but will generate returns in the long run.
Hi and Assalamualaikum. My name is AIDA HERMANSSON. So our group has chosen question 1 as our investment appraisal question. The details of this question is that Techno Engineering Sdn Bhd wants to replace their old machine with a new machine. So now we will go on to calculate the initial outlay.
For this question, we will be calculating the initial outlay. Initial outlay is the initial investment that is necessary for a company to purchase the new machine. The formula for initial outlay is cash outflow less cash inflow. In this question, we will begin with calculating the cash outflow, which consists of the purchase price of new machine, and we will add it with installation costs, modification costs, transportation and tax costs, which brings the cost of new machine total to 940,000 ringgit. We will also be adding working capital, which is the increase in working capital of 105,000 ringgit. This will bring to a total of 1,045,000 ringgit. Next, for cash inflow. As per the question, we have a sales proceeds from old machine amounting to 200,000 ringgit. And next, we must calculate the tax gain. The formula of tax gain is tax rate times profit or loss on disposal. So we must now calculate the profit or loss on disposal. The formula is selling price less net book value. The selling price is 200,000 ringgit less the cost of 550,000 ringgit less the accumulated depreciation of 206,250 ringgit. So the selling price of 200,000 ringgit will be less with the net book value of 343,750 ringgit. This will bring to a loss on disposal of 143,750 ringgit. We will times with the tax rate that was given in the question, which is 24%, and this will bring us to a tax gain of 34,500 ringgit. As we already calculated the tax gain, we can now calculate the initial outlay. The cash outflow of 1,045,000 ringgit will be less cash inflow of 234,500 ringgit, and we will get a total initial outlay of 810,500 ringgit. Now, we will be calculating the annual differential cash flow. The annual differential cash flow is the annual cash inflow that will be received from year to year until the project has matured. The way to calculate this is benefits less costs. There are two columns here, which is the first 3 years and the remaining years. As per the question, there is an increase in sales of 300,000 ringgit for the first 3 years and then an increase of 20% for the remaining years, which will bring to a total of 360,000 ringgit. From the question, there is a decrease in maintenance cost of 50%. We will use the maintenance cost of existing machine of 50,000 ringgit times 50%, which will bring us to 25,000 ringgit. There is also a decrease in defect cost of 75%, and we will use the defect cost of the existing machine of 30,000 ringgit times 75%, and we will get 22,500 ringgit. Next, we will be calculating the cost. From the question, it already stated that there will be an increase in operating costs of 25,000 ringgit. Now we have to calculate the increase in depreciation. The way to calculate this is depreciation of new machine less depreciation of old machine. The depreciation of old machine is 550,000 ringgit divided by the useful life of 8 years. This will bring a total of 68,750 ringgit. As for the depreciation of new machine, we will use the cost of new machine of 940,000 ringgit less the salvage value of 50,000 ringgit, which means a total of 890,000 ringgit. The 890,000 ringgit will be divided with the useful life of 5 years, which brings the total of depreciation of new machine to 178,000 ringgit. Now, to calculate the increase in depreciation, we will use 178,000 ringgit less 68,750 ringgit, which will bring to a total of 109,250 ringgit. We will bring the increase in depreciation to the table, and now we can calculate the profit before tax. The profit before tax will be calculated with benefits less costs, which will bring to a total for the first 3 years of 213,250 ringgit and the remaining years 273,250 ringgit. We will take those amounts and calculate the taxation using the tax rate of 24%. The profit before tax will be less taxation to get the profit after tax for the first 3 years of 162,070 ringgit and the remaining years of 207,670 ringgit. We will add back the increase in depreciation to get the after-tax differential cash flow for the first 3 years of 271,320 ringgit and for the remaining years the total of 316,920 ringgit. Next is the terminal cash flow. It is the cash flow that occur only at the project termination. This will include the salvage value of the new machine of 50,000 ringgit and also the net working capital recovered at the end of the project, which is stated in the question of 105,000 ringgit. This will bring the terminal cash flow total to 155,000 ringgit.
Now let's move on to question C, which proceed with the calculation of the NPV, net present value, based on the provided data. We will first prepare a table and calculate the present value for each year. In year 0, the initial outlay is 810,500 ringgit. Since it is the initial investment, we multiply it by the present value, interest factor PVIF for year 0, which is 1, giving a present value of 810,500 ringgit. For years 1 through 3, the after-tax differential cash flow is 271,320 ringgit per year. To calculate the present value of this cash flow, we multiply the annual cash flow by the present value interest factor of annuity PVIFA for 3 years, which is 2.1743, resulting in a present value of 589,931 ringgit 8 cents for this year. For years 4 and 5, the after-tax differential cash flow is 316,920 ringgit per year. We multiply the amount by the present value interest factor PVIF for this year, which is 0.9529, yielding a present value of 301,993 ringgit 7 cents for these 2 years. In year 5, we also account for the terminal cash flow, multiplying it by the PVIF for year 5, which is 0.4371, resulting in present value of 370,750 ringgit 50 cents. Finally, to determine the total net present value, we sum all the present value and get the total NPV of 1,149,174 ringgit 64 cents. Now, I will present the internal rate of return IRR for technical engineering Sdn Bhd. Before we move on to calculation, we must know that to calculate IRR, we must have an positive NPV and a negative NPV. After doing some calculation, our group has concluded on 24% for the positive NPV and 28% for the negative NPV. For the lower rate of 24%, the present value for year 0 is negative 810,500 ringgit, which represents the initial outlay. For years 1 to 3, the present value is 537,566 ringgit 32 cents. For years 4 to 5, it is 242,158 ringgit 27 cents, and for year 5, the terminal cash flow give a present value of 52,870 ringgit 50 cents. Adding this value together result in a net present value of 22,095 ringgit 39 cents at the rate 24%. For the higher rate of 28%, the present value for year 0 remains negative 810,500 ringgit. For years 1 to 3, the present value is 506,934 ringgit 39 cents. For years 4 to 5, it is 210,308 ringgit and 11 cents. And for year 5, the terminal cash flow give a present value of 45,105 ringgit. Adding this together give an NPV of negative 48,152 ringgit 60 cents, which is negative. The IRR for the company is 21%. To calculate this value, we use the IRR formula, which we can see on the slide, which equals to 24% plus open bracket 22,095 ringgit 39 cents divide open bracket 22,095 ringgit 39 cents minus 48,152 ringgit 60 cents close bracket times open bracket 28% minus 24% close bracket, and we will get 21% as our IRR. Now I will explain the concept of the payback period and how it applies to our project investment appraisal analysis. The payback period is the time it takes to recover the initial investment made in the project. In our case, the initial outlay of 810,500 ringgit in year 0 represent the investment cost for the project. Over the next 5 years, we will receive different amounts of cash inflows. For the first 3 years, the annual cash inflow will remain constant at 271,320 ringgit. In the subsequent 2 years, the annual cash inflow will increase to 316,920 ringgit. As you can see in the table, we have breakdown of both the annual and accumulated cash flows. The accumulated cash flow reflect the total cash flow received out until each year. The payback period is the time it takes for us to recover our initial investment from the accumulated cash inflows. To calculate the payback period, we use the following formula, which is 3 plus initial outlay minus accumulated cash flow 3 and divide with cash flow 4, which 3 plus open bracket 810,500 ringgit minus 813,960 ringgit close bracket divide with 1,130,880 ringgit, which equal to 3 years payback period.
For the last question, we will discuss whether Techno Engineering Sdn Bhd should buy new machine or continue with existing machine. The decision that our group have made is that Techno Engineering Sdn Bhd should buy the new machine because the net present value of RM149,174.64 is positive, indicating a profitable investment. Additionally, the payback period is exactly 3 years, which is well within the acceptable limit of the desired payback period of 3 years, making it a financially sound decision.